Most influencers in the market, 95% of retail traders in crypto are basing their profit-taking strategy off of a price, off of some magic Fibonacci sequence number that their digital asset they think is going to hit in the future. That is the most illogical way to plan a profit-taking strategy that I've ever come across in crypto and investing. Bro, it's so funny. I just pulled up this post and you're the first comment that's on the bottom of this.
What?
I will show you right now. Man, let me tell you what, people gotta wake up. People gotta wake up, man. It's so sad to see, like, I think this stuff is a game for some reason. I think investing and trading and becoming financially free and wealthy is just like you press a button, download an application on your phone, and just hodl, and you're just going to become rich. Like, that's the illusion right now that people have in crypto. It's so crazy to me,
Bro. And then the TikTok spaces that I'd be listening to, like, everyone is just like emotionally talking about their emotions of what they feel, where the price is at. Like, I was in a TikTok live like 3 days ago, and one of the guys, he straight up told me, I didn't even know what to respond with. I was like, all right, it's on sale. But he was like, XLM is 9 cents. What do you think about that? And I'm like, it's on sale, bro. Like, what are we just having a powwow with our emotions and our feelings about what we feel about where these assets should be? Like, dude, like, have you
Well,
ever heard of DeFi?
let me capitalize by saying, first, we need to understand the why. Why am I even hosting this call today? First off, to show you all that we are real traders, real investors here at CYPRX, and we actually understand the markets. And we've been trying and attempting to educate people on this process of understanding the markets for some time. I know that tracking fundamentals and picking apart the markets, not everybody has time for, but this stuff is really important to save your mentality long term, especially if you're an investor and you're a hodler in this space, so you can understand why your assets aren't performing well. So that way, when influencers like this gentleman here on the internet are tweeting out things like this that gets 102,000 impressions, you aren't making irrational, emotional based decisions because you actually understand risk on, risk off market mood, what type of market sentiment we're currently sitting on, and why risk assets are not performing well. So that's the why behind this call. Again, here at CYPRX, always attempted to try to provide value, education, and information for you all so you can become the best investor that you possibly can be, right? And I'm telling you all right now, the people that are tapped into CYPRX, they're benefiting. The people that are paying attention to the fundamentals that never did before, they're on the right side of the markets. They're understanding when to properly dollar cost average in, when's a good time to open up a liquidity pool, when's a good time to trade in certain directions, and they're benefiting. They're not just lost in the sauce. So if that sounds interesting to you, stick around for the entirety of this call. You're going to need a high IQ and a high teachability index to survive the entirety of this call, because I'm going to be going into detailistic things that you might not quite understand, but full circle show you why they are important to understand. So we're going to start off here with this gentleman. I cannot stand influencers like this that have been in the game. I've seen this gentleman for as long as I've been in crypto on the internet, and he's always mind-boggled and confused. At least that's the projected image that he gives from what I see looking in. And again, I don't know this person independently or individually. I just go off of actions and what people say on the internet because that's all we have to digest. This gentleman right here, tweeted out or posted, why the F is XRP, when the XRP, when the F is XRP actually going to do something? And I think it's funny that Mr. Aquaman's post down at the bottom just goes on to say DeFi could be earning you yield on your XRP right now, but you know nothing about that. But that's besides the point of this conversation, because it could be. That's a very true statement. But I want to explain to the 102,000 people that viewed this post and my followers and anybody else listening to this call why XRP and the rest of the digital asset space is not flipping massive bullish numbers right now, right? There's a reason for that. It's not just because it's not random. There is a fundamental reason why larger investors than you and I that actually control these markets via price fluctuations are reallocating their capital currently into dollars and not risky assets. Again, we're going to break that down, and I'm going to show you how we've been talking about this for the longest time on the CYPRX platform, really picking apart the markets and showing you guys live examples once we get into the charts, what's going on. Okay. So bear with me. Again, you're going to need to have a high IQ to stick around for this video, but it's going to be very informal, educational, and hopefully you guys learn something so that way you're not like this individual, 7, 8, 9+ years in the market and still mind boggled and confused as to why your assets are not performing well. And you actually take a mature approach and you really start to win. Aren't you tired of losing? Aren't you tired of wondering and questioning why your assets or your portfolio is in the red and you actually want to know why? Well, I'm going to try attempt to break that down for you all in an easily understandable way. I'm going to have to read some things for you all. So again, make sure that you're listening and you're tapped in. So I just want to show you that we here at CYPRX, we've been telling you guys about this for some time. This post is from March 19th, 2024. If we go back and we look at the charts, the total cryptocurrency market cap on March 19th, 2024, that's roughly here in this area. When we started the down or the decline in the total cryptocurrency market cap from roughly about $2.7 trillion was our top out in 2024 to where we currently sit today. Right. So we've been at the forefront of this pullback, trying to enlighten people as to why the pullback even started, why the bullish momentum that we saw at the beginning of 2024 started to fade, and where we currently sit in the market environment today. And so we're just going to enlighten you all real fast and just read a previous fundamental piece where I said on March 19th, crypto liquidations continue. Here is why. Crypto crash. The current crypto market sentiment continued to favor a risk-off dynamic today as the US dollar maintained its robust position. And something to pay attention to as we go on, and I'm going to show you some live examples of individuals, some information on the internet that has the mentality of the masses distracted to the wrong thing. Okay. So just again, pay attention. As the US dollar maintained its robust position, largely propelled by positive economic data. Specifically, in February, we saw notable growth trends in housing starts and building permits across the US. Then I go into break down housing starts and why it's impressive and why it shows economic strength and resiliency in the US economy. And I said this data instigated a bullish trajectory for the US dollar index, which steadfastly held its ground near the 104 psychological level mark. Moreover, higher consumer price index and producer price index, i.e., CPI and PPI reports from last week also played a role in the strengthening of the dollar. Elevated CPI and PPI suggest increased inflationary pressures, which could prompt the Federal Reserve to consider tightening monetary policy or keeping interest rates higher for longer, thereby supporting the dollar's value. Again, keep in mind, this was put out during the peak of the pullback in 2024, enlightening you all on why a risk-off market sentiment started to engulf the entire cryptocurrency asset class as a whole, right? Now, more recently, I posted out to you guys on June 10th, 2024. It will get worse before it gets better. How do I know these things? It's not because I have some crystal ball. I'm not making riddled predictions or anything like that. It's because I understand risk on, risk off sentiment. If we go look at the total cryptocurrency market cap and where it was at on June 10th, 2024, zooming in here on the right side of my screen, you can see that this is where the market was on June 10th, 2024. And we have since that date that I put this post out to you guys, seen a market decline, right? Where you can see the total cryptocurrency market cap on June 10th was hovering at around 2.5 to 2.48 trillion and is now sitting at $2.3 trillion. How did I know that this was going to happen? How was I so confident in being able to tell you guys that it is going to get worse before it gets better? It's because of my understanding of fundamental analysis, risk on, risk off market sentiment, and order flow via these large financial institutions, asset managers, hedge funds, private family offices, retail investors with millions of dollars that actually control the fluctuations of this market. You really think that retail investors plugging in $100 here, $1,000 here, maybe even $50,000 here are the ones that control the price fluctuations in this market? You're dead wrong. It is these large players, whether it's retail or financial institutions with hundreds of thousands and millions of dollars that control the price fluctuations in these crypto markets. And they are paying attention to these fundamentals. I guarantee you that take two people, just as an example. Two people go to Wall Street to a crypto hedge fund, and two people have the same size portfolio. One individual goes in and says, presents their portfolio and their strategy to investing and says to the hedge fund, I invest and make my trading decisions and investing decisions just off of riddles and memes and random sacred gematria posts on Twitter. That hedge fund is going to laugh at you, think that you're crazy, think that you're absolutely mental, and kick you out of their organization. Whereas somebody that goes in with a strategic approach, breaks down fundamentals, talks about how they understand risk on, risk off market mood, breaks down how they understand these intraday news events that take place that create these risk on, risk off market moods, they're going to accept them into their hedge fund and talk more about them and talk about their portfolio and so on and so forth. The person that does not do those things will get laughed at by these large players. Okay, that's the mindset I'm just trying to get you guys to see. The markets are not ran off riddles and random price predictions and all this bullcrap, Fibonacci sequences, technical analysis, RSI, freaking indicators. No, they're fundamentally driven, okay, based off of order flow in the market, the environment that's created, whether it's a more risk on, risk off environment. Okay, when you understand that, you start to understand why crypto's down, why it's up. So moving on, this is a more recent post from June 8th. This is from last week, where we saw upbeat NFP figures. And I try to break this down for you guys as light as possible. I said, why is crypto down? We can see during last week, roughly on that Friday, June 7th, rolling over into the weekend, total cryptocurrency market capped at $2.58 trillion, and since then has been in a decline. If we go look at the US dollar at the same exact date, we saw inflow into the dollar, right? Here's that same exact date, positive US dollar momentum, outflow of risk assets, inflow into dollars. Why was this created? Why did this happen? Right? So again, breaking this down for you all piece by piece, so you understand, as my followers and individuals interested in taking your investing career a step further and actually maturing and understanding the order flow of these markets. Let me break that down for you all. I said, please unfollow anyone who has said that this recent pullback is the last shakeout. Instead of following uneducated influencers that sound like they're smart, choose education and enlightenment in the age of information. So what is happening? Again, this was last Friday. What's happening now is a strategic move by big financial players and traders with enough capital to move these markets intraday. They are shifting their investments away from riskier assets like crypto because they are now expecting interest rates to stay higher for longer. This shift is predominantly driven by strong labor market data in the US. And this was again last Friday, which makes traditional currencies like the dollar more attractive than cryptocurrencies for the time being. Again, this is all intraday. This is all temporary. Zooming out, yes, we're bullish on crypto. Absolutely. You guys know that I'm a bullish market participant. I'm investing in crypto. I'm dollar cost averaging in at discounted prices. But that does not mean I don't understand why the market's pulling back, and neither should you. Now, this could change as newly released fundamentals could impact the current market environment. So what happened? This past Friday, the US labor market showed strength with a positive NFP figure. NFP figures are important because they indicate the health of the US job market, which influences the strength of the dollar and affects risk assets like stocks and cryptocurrencies. When NFP figures are healthy, it boosts confidence in the dollar and reduces interest in riskier assets. Again, I'm not making this up. We're going to do the correlation full breakdown. Once we zoom out, I'm going to go over each of these fundamentals. I'm going to show you all the exact correlation that it has with the total cryptocurrency market. But zooming in and just taking a look at last Friday, since we're on that topic, we can see here. Here's a fundamental on the left-hand side of my screen that says US dollar jumps after strong US jobs report. The surge in non-farm payroll triggers a jump in dollar across the board, while risk appetite is deteriorated. What have we been attempting to tell you guys since back in March, right? Risk asset momentum has deteriorated. Here it is, says right here, sentiment continued to favor risk-off dynamics today. We told you guys this all the way back in March. You see? And that dynamic is still continuing because of upbeat and resilient US economic data inflow into dollars consistently. Okay? So I'm not going to beat a dead horse, but I said this is not the last shakeout like idiotic crypto influencers claim this is. It is a strategic reallocation of capital amongst larger players, shifting risk in their portfolios. That's all it is. Investors, large asset managers, these hedge funds, these people in retail that have more money than you and I, their goal is to mitigate risk. And so when they see positive US economic data, they see resiliency in the US economy, that usually tends to lead to strength in the US dollar and weakness in risk assets like stocks, crypto, GBP, euro, right? And gold. And so investors are just reallocating their capital into assets that are going to appreciate on positive US economic data, and that's the dollar. Okay. When you understand that, you stop freaking out. You stop acting like this idiot on Twitter with thousands of followers misleading people into not understanding why their assets are not performing well. Okay. Don't be this type of person. Be an educated individual, a mature person in this market that actually understands these things. Okay. So moving on. Now, something else I want to point out to you all. What has been trending on the internet over the past week? It is literally hilarious that people think that this is actually a reality. Okay. I said to you all, full stop. And we're going to get some opposing opinions. And I get that. But when you really truly dig deep, you pay attention to these panel discussions via these large financial institutions, you actually read bank documents, and you read the I'm not even going to get into that right now. Let me just blow your mind. Okay. And I'm going to show you physical proof. So I said to you all, by the way, looking at the date, this is June 9th. I said, full stop, education time. Twitter enthusiasts are back again trying to manipulate people with misinformation. Most likely, and again, confirm to yourself that you've heard this, because most likely if you're in crypto, you have. Most likely you have seen the headlines trending now that the Saudis have not renewed the crude oil trading peg agreements with the petrodollar. The agreement expired today. This again was back from June 9th. Please educate yourself on macro events outside of what's trending on your Twitter feed to entertain you. Let me show you some examples. Look at all these posts right here. Saudis have not renewed the crude oil trading peg agreement with the petrodollar. The agreement expired today. 176,000 impressions. Petrodollar ends this week. Collapse of the dollar. Blah, 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 blah. 33,000 impressions. Update, another nail in the coffin for the dollar. Saudi Arabia have not renewed the crude oil trading peg agreements with the petrodollar. Dollar's going to fall off the face of this earth. 154,000 impressions. Do you all see where the mindsets of the masses are? So what was everybody doing? Most likely buying up crypto at a top, not understanding real fundamentals and the things that are going to actually create price fluctuations in this market. Now, again, to reiterate, I said the petrodollar system is certainly significant, but its expiration would not necessarily lead to the immediate collapse of the dollar like your social media feed is most likely making it out to be. It's definitely a piece to the puzzle that cannot be denied, but the dollar's strength relies on a multitude of factors, including its status as the world's primary reserve currency, the strength of the US economy, and geopolitical stability. While changes in oil trading agreements can impact the dollar's value, its overall stability depends on a complex interplay of global economic forces way beyond just the petrodollar agreement. So you can imagine back on June 9th, keep in mind, I'm physically showing you all how real we are here at CYPRX. Going back and looking at the charts on June 9th, where was price action at? I already showed you guys. It was right here at $2.5 trillion. When everybody was thinking that the dollar was going to collapse back on June 9th, look at where the dollar was down here at this low. What were we telling you all here at CYPRX? It will get worse before it gets better. We told you all. How did we gauge this? Because we're not paying attention to these clown ass reports misleading you, okay, into really understanding fundamentals properly, right? Everybody thought the dollar was going to collapse last week because of this. Guarantee you there were people on live Twitters. There were people that made YouTube videos talking about this. They are uneducated. They are manipulated by the mainstream media that has their brains in a freaking jar, and they cannot think outside the box. The petrodollar system and the collapse of the US dollar is going to be so much bigger than any one single event. And when it does happen, because eventually it will, the dollar will eventually, in some time, in some future realm, whether that's 5 years from now, a decade from now, 2 decades from now, whatever, it will eventually happen. It's just a cyclic event that's going to take place. It will be so detrimental and catastrophic. It is not something that you want to hope for, because every single person on the face of this earth, if the dollar is replaced as the global reserve currency will suffer in some way, shape, or form. That is necessary in order for a global reserve currency to lose its status. The U.S. military will need to be overrun. Go look at all the major hedge funds in the United States, BlackRock being one of the biggest, and look at what assets and look at what denominated currency their assets are all denominated in. Okay, go look at BlackRock's customers. They have customers in China, customers from Russia, customers from Brazil, customers from India, and go look at what all their assets are denominated in US dollars. Go look at the biggest clearinghouses in the world. Some of them are United States clearinghouses. What are they trading in? What are they moving value in? US dollars. That is not all going to be replaced because of some petrodollar depegging. You understand? That is just a small piece of a larger puzzle that's unfolding. So anybody that believed that that was the case last week, that dollar cost average into crypto is now seeing red in their portfolio because they don't understand the macro, the intraday. Okay. And again, we've been attempting to show you all this here at CYPRX, and I cannot stress enough, now is the time to tap in, to wake up, to get educated. Stop believing all the crap that you see on the internet and really, really, truly tap in. Okay. So let's zoom out. Let's just take a zoomed out perspective, and I want to show you guys the inverse correlation via the US dollar and the total cryptocurrency market cap, and just kind of show you why we've seen a slight depreciation and a pullback in the total cryptocurrency market cap. In May, we saw a bullish month. Pretty much the vast majority of May was bullish, and I'm going to show you guys why that was, and then why we are experiencing a slight pullback now, failing to break above $2.6 trillion, leading us to where we currently sit at $2.3 trillion. So you all aren't confused like this individual here, or any other individuals that are misleading you on the internet, and you really understand why your portfolio across the board is most likely in the red. Okay. So let's just take a look. Again, I apologize that this is probably small when you're looking at it. But again, I can't really make it that much bigger. So let's start back in March. Why did we see strengthening of the dollar? And why did the total cryptocurrency market cap pull back and top out at roughly $2.7 trillion? This was primarily due to an uptick in inflationary readings. You can see here's a report. I'm not making this up. Yet another U.S. inflation gauge coming in hot for February. Remember, this data lags. So the February data gets released in March. March data gets released in April, and so on and so forth. So we got February's data, inflationary figures in March, and it showed a slight increase in inflationary pressures. This weighed on the rate cut sentiment. This contributed to the Federal Reserve keeping interest rates higher for longer to tame inflation and bring it down to its overall mandate of 2%. And this weighed on risk sentiment. Investors started to reallocate their capital into dollars and take profits from risk assets. Larger investors than you and I, when everybody was euphoric, talking about, oh my gosh, the Bitcoin ETF got approved, Bitcoin going to $100,000. Oh my gosh, we're about to see a blow off top in Q1 2024. Bull market's on. Here we go, guys. What were large investors doing? Look at the total cryptocurrency market cap. At the same exact time that the dollar was appreciating in value, increasing, what were larger investors doing? They were selling on you. They were dumping their positions in crypto, selling, and reallocating their capital into dollar. All right. Moving on. This is now April. In April, we also saw higher inflationary figures. Here's the report right here. Persistent inflationary pressures could delay Fed action. U.S. dollar surges on CPI upbeat. Gold is pressured. Hot U.S. inflation chops down cut pricing. Right. So again, we had another sentiment due to higher inflation readings, weighing on the rate cut narrative, weighing on risk assets, seeing larger investors than you and I reallocate their capital into dollars. Dollars surged. Look at the date. April 9th, Tuesday, that week, Monday through roughly around, let's just say Friday the 12th, we saw another surge and increase in the strength of the dollar. Look at the total cryptocurrency market cap. That same exact week, same exact fundamentals, investors reallocating their capital into dollars and out of riskier assets as the market mood was risk off, right? Inverse correlation, strength in the dollar, weakness in the total cryptocurrency market cap. Reason why I'm using the total cryptocurrency market cap as an example is because there are a couple of handful of different digital assets that did experience some continued bullish momentum during these events. So we're looking at the total cryptocurrency market cap as a whole to show you that it's risk on, risk off at the end of the day. All right. Then in May, why did we see a predominantly bullish month where the total cryptocurrency market cap bottomed out at roughly give or take $2 trillion and then top out all the way at roughly about 2.6? This was primarily driven by downbeat U.S. economic data and contraction in PMI figures. Here are the fundamental reports. You can see Chicago PMI fell to a 17-month low. There's one report. We can see here, US manufacturing PMI came in at 49.2% in April. You can see economic activity in the manufacturing sector actually contracted in April after 1 month of expansion following 16 consecutive months of contraction. You can see again the timing of that report. And then at the same exact time, at the very beginning of May, we had the FOMC release, and we had the Federal Reserve Chair, Jerome Powell, and his comments after 2 days of policy meetings were not as hawkish as many had feared. This prompted and boosted risk assets under the assumption that because of a less hawkish Fed, downbeat US economic activity, that at some point in time in 2024, rate cuts were still going to take place. This prompted risk asset buying. This prompted larger investors than you and I to reallocate their capital out of dollars and into riskier assets like crypto, gold, and stocks. And in May, the vast majority of the month of May, we saw a bullish uptick. You can see the inverse correlation. Here is all of those fundamental reports and the dates. Outflow of dollars, a decline in dollar at the same exact time. Here's the dates: Tuesday, April 30th, rolling over into the 1st and 2nd of May. Same exact time on the dollar. We saw increased risk asset buying. Okay. Now this leads to where we currently sit this past previous week and then today. All right. So this past previous week on Friday, zooming in, I really want to show you guys this again. Pay attention to detail. Why did we see on Friday last week a significant market sell-off in crypto from roughly around 2.6 trillion all the way to where we sit right now at 2.3? This was primarily driven by US dollar strength and upbeat NFP figures, showing resiliency in the US labor market. Here's the fundamental report. The surge in non-farm payrolls triggered a dollar jump across the board while risk appetite deteriorated. Again, investors reallocating their capital into dollars. You can see on that Friday, we had an inflow into dollars and an outflow of risky assets on the same exact day. Okay, that's all it is. Now, more recently, today, why are we still seeing dollar strength and a sell-off in risk assets? As you can see, more intraday, we're seeing a depreciation over on the right-hand side of the total cryptocurrency market cap over the past 24 to 48 hours. We've gone from roughly around 2.4 trillion down to 2.36 trillion. And in dollar, we've actually increased in value. Keep in mind, all the clowns on the internet last week were telling you all that the depegging of the petrodollar was going to tank the dollar. Oh, the dollar's going to crash, blah, blah, blah. No. Oh man, it makes me laugh so hard because I'm physically showing you all, but people will still be in the comments and be like, "Oh, it's going to crash. It's going to crash." No, yes, I agree. I agree 100% that the dollar one day will crash, but one day, that day is not today, people. We will know when it happens, when the fundamentals surrounding the dollar depreciation actually come into fruition. And right now, we're still seeing strong US economic activity. We're still seeing resiliency and relative health in the US labor market. And we're still seeing sticky and troublesome inflation where, yeah, the past two reports for inflation have slightly decreased, showing some disinflation. But over the month of April and March, we saw an uptick in inflation. So inflation is still bouncing. It's still pretty much ranging, coming in higher, coming in lower, coming in higher, coming in lower. It's not significantly decreasing at the rate or pace that the Federal Reserve would like it to. Okay. And that's still going to prompt strength for the dollar. It's going to prompt investors to start to price in a higher interest rate for longer environment. And that is not a good environment for risk assets. A lower interest rate environment is more predominantly healthy and benefits risk assets. If you go back and you look at previous market cycles, 2017, 2020 to 2021, we were in a low interest rate environment. Economic stimulus and easing, quantitative easing was taking place, right, to boost economic activity. Anyways, I'm not going to get into that, but when you understand those metrics, you understand why we're seeing this depreciation. So again, this is our market update. This is the most recent market update explaining why today and over the past, let's just say week, we've seen a decline in risk asset valuation. Most likely watching this right now, your crypto is in the red. Unless you bought back in 2022 at the bottom and the lows of the bear market, your portfolio is most likely in the red right now. So let's understand why on an intraday level that is. So again, to revert back to this individual here, You are not confused. You're not one of the individuals that's like, when the heck is XRP actually going to do something? When you understand that right now we are in a trading environment, people, none of these digital assets are being utilized for the utility. These financial institutions are not using XRP or any other digital assets right now, give or take a handful and some small proof of concepts and testing for their actual utility. They're trading. Hedge funds, they're trading. Asset managers, they're trading, right? They're all trading. It's all trading activity. 95%, go look at this yourself, of the transactions and the value and the momentum in this market right now is due to trading activity. In my personal opinion, that will all change one day when regulatory clarity comes into play on a global scale. Once the foundation and infrastructure is solidified, and it's coming, that will change. And we will see a utility market blow off top, melting faces, individuals that talk crap about utility assets witted out of the market because they didn't hodl, they didn't earn more assets through DeFi, right? But that time is not now. Right now, you have to understand these price fluctuations so that way you're not confused, so that way you're not making irrational emotional decisions and thinking that crypto is a scam because all the influencers were telling you that we were going to see a blow off top in Q1 and Q2 2024, but we have not seen that yet. So that way you understand what you need to be doing, which is buckling down, learning how to grow your wealth in the now, learning how why now the market is pulled back, you could still be earning, you could still be growing. Just like Mr. Aquaman said on this gentleman's post, your XRP could be working for you. Why does anybody care about the value of XRP when you could literally be using your XRP to make more XRP to grow your XRP bags? Makes no sense, right? So let's get into this real fast and then I'll wrap up and I'll see if Mr. Aquaman has anything for you guys. But I said, why risk off over the past couple of trading sessions, even though the past two inflation reports from the US have been lower, showing signs of disinflation. So I said to the private community, I want to take a moment to explain why, despite today's report of lower inflation and higher unemployment claims, which usually tends to create a risk on, market mood and weakness in the dollar, it is not. It is because we are still seeing a stronger dollar due to risk off sentiment. Typically, I said, lower inflation, higher unemployment would support risk asset buying and a weaker dollar. However, several factors are still here at play. First, during yesterday's Federal Reserve meeting, the FOMC issued a hawkish statement. They reiterated, i.e., Jerome Powell, that they do not foresee imminent rate cuts. Given the current market environment, the Fed emphasized the need for more progress on inflation and a weaker labor market before considering rate cuts, which right now we are not relatively seeing. We're still seeing healthy NFP figures, and we're still seeing sticky and troublesome inflation. Additionally, the focus for potential rate cuts has now shifted more towards growth data rather than just CPI and inflation reports. Slower growth reports could lead to earlier rate cuts now that inflation is starting to decelerate. Looking at economic growth in the US, this is important. And again, this is why all these people that are screaming, oh, petrodollar, death to the dollar, don't understand fundamentals. This is how you can understand who to follow and who not to follow, people. I'm telling you, wake up. When you go look at the US economy compared to other G10 currencies, the US economy is outperforming every other single currency and every other single jurisdiction right now, like Eurozone, like the UK. Just go look and read the fundamental reports. The UK has the most healthiest and resilient economy right now out of all the major economies. Okay. Looking at economic growth so far in the US this year, the PMI figures from last week are telling. Business activity in the US services sector expanded in May, with ISM services PMI recovering to 53.8 from 49.4 in April, surpassing market expectations of 50.8. The report also showed that the prices paid index, or the PPI, a measurement of inflation, edged lower to 58.1 from 59.2, and the unemployment index actually improved to 47.1 from 45.9. The increase in the composite index in May reflects notably higher business activity and faster new orders growth. The services PMI indicates sector expansion instead of contraction, expansion for the 46th time out of 48 months, highlighting the relative strength of the US economy. When the US economy is strong, so again, listen up, because all those people screaming petrodollar, collapse of the dollar, they don't understand fundamentals. When the US economy is strong, investors with much more money than you and I are more inclined to hold their capital in dollars. This preference is amplified by the comparatively weaker economic performance of other major G10 currencies. For example, in the UK, monthly real GDP showed no growth in April. In the Eurozone, the industrial production decreased by 0.1% in April compared to March, now 3% lower than a year ago. The Eurozone industry has been in a recessionary trend since 2023, with no immediate sign of recovery. So, given the global context and the relative strength of the US economy, this makes the dollar more attractive to investors for now. That's the key part right there. For now, it's temporary. It's also important to remember that during the periods when prices in crypto and risk assets are discounted, we should take a long term view and capitalize on discounted opportunities. Okay. So I reiterated that to the private community members, again, always keeping them engaged and intact with current trending fundamentals that actually matter, not this bull crap that has everybody distracted, and not this misguided influencer crap on the internet where they've been involved in the markets for 7, 8, 9+ years, but still have no idea what's going on. Okay. I cannot stress enough that now is the time to capitalize on education in the age of information and enlightenment, and really mature in your investing and trading career. Regardless if you're a trader or you're an investor, you should never be confused as to why your portfolio is up or down. Okay. That's my spiel. I hope that you all enjoyed that. And I hope that you all are intellectually inclined enough to understand some of the things that I was saying. These are not my opinions, people. I'm not here trying to tell you all, oh, crypto is going to drop off the face of the earth. When I told you all the other week, it's going to get worse before it gets better, I didn't tell you this because it's my opinion. I told you all this publicly on the X space because I saw that in the fundamentals. And again, you can see that everybody and their mom, most likely, on June 10th, the same exact date, was following this petrodollar news, thinking that the dollar was going to collapse and dollar cost averaging into crypto here in this area. When here in this area, we were telling you all it's going to get worse before it gets better. You can see who's on the right side of the market. Okay. I'm just saying, it's devil's in the details. So anyways, that's my spiel. What you got, Mr. Aquaman? Sorry, I was rapping, bro.
Nah, bro, you're good. You crushed it right now, bro. You blew my mind right now. I swear. Because like, bro, this is now the second time I'm seeing this inverse correlation, and it makes sense. And I feel like now it's like when you're in this space, it's like really looking for all the inverse correlations and where, wherever, whatever you're involved with. So like, for example, altcoins are not going to explode until Bitcoin dominance comes down, right? Just based on fundamentals and that inverse correlation. So inverse correlation is powerful, man. And would you say inverse correlation is like some of like the main fundamentals as far as like just
Yeah, man.
understanding
I
price
mean,
action?
I've been a profitable trader and investor now for going on 5 years, and it's one of the main predominant factors that drive growth in my portfolio, right? When I can see more inflow into dollars and I can see supporting fundamentals that drive risk off the, risk off market environment, bro, I was taking profit back in March, back in April, and now reallocating that profit back at the bottom in May and seeing an appreciation in my portfolio and actually growing portfolios and not just hodling on assets, always expecting the market to go up. That's the problem with a lot of retail investors, is they have this mindset because of how diluted the influencer space is. Most influencers constantly promote this idea that the market's going to go up for forever, because telling your followers that the market's going to drop, or that the market's bearish, doesn't really attract a lot of views, doesn't really attract a lot of momentum to your content. And so people tend to shy away from it and not educate themselves on that aspect of the market. And then they get wrecked long term. You start to see these influencers with hundreds of thousands of followers, but you wonder why they're not really actually making money from the market. And then I know that people that are intellectually inclined enough to understand are like, this guy is always bullish. And I get that perspective. If you're just a dollar cost averager, you don't want anything to do with these markets intraday. I get that totally. That's your approach. You think you're going to be successful that way, to each his own. Best of luck to you. But I can tell you right now, the people that actually pay attention to these things like inverse correlation and tracking these fundamentals, even if you don't have time, joining a community that hosts Zoom calls that you can go back and rewatch so you actually understand what's happening, like here at CYPRX, you will become a much more profitable investor and trader because you actually understand when to take profit, when to reallocate capital, when to dollar cost average in, when not the dollar cost average in, and you really understand the price fluctuations of the market. And these price fluctuations are not going to change. They're not going to change as long as assets are tradable in crypto. These price fluctuations are going to happen. You're going to see market pumps, you're going to see pullbacks, and if you don't understand when to take profit, what's the point of investing? What's the point of investing? That's how you make money, is by learning how to take profit. So many people don't have a profit taking strategy. Let me put it this way: most influencers in the market, 95% of retail traders in crypto, are basing their profit taking strategy off of a price, off of some magic Fibonacci sequence number that their digital asset they think is going to hit in the future. That is the most illogical way to plan a profit taking strategy that I've ever come across in crypto and investing. You should never be gauging. I mean, I get, yes, okay, that could be one aspect, but that should never be the primary aspect of your profit taking strategy. There's so many other factors that come into play as to when you should be taking profit. Because let me just say, for example, imagine how many people, I'll just use XRP as an example, think that XRP is going to go to $100. Okay. And let's say it goes to $10. And when it goes to $10, the road all the way up to $10 was extremely bullish for risk assets. Risk on market mood, Fed rate cuts, stimulus injections, quantitative easing, no geopolitical escalations and tensions, just real great growth in the crypto ecosystem, bullish developments, like everything risk on, right? XRP hits $10. When XRP hits $10, a nuclear war is announced. Russia announces a war with the United States. Federal Reserve flips interest rate environment and starts hiking rates again, and starts quantitatively tightening monetary supply instead of easing it, right? All of those factors are going to stop XRP, as long as it's in a trading environment, from surpassing $10, and it's going to create a pullback, right? Now, all of those people that could have pulled some profit, not all of your profit, because you never want to take all, you want to take some, reallocate that capital, that could have pulled profit at $10 and reallocated back at, maybe it goes back down to $1 to buy more XRP, are not going to understand how or when to do that, because they were so fixated on a price that they imagined coming into fruition in their head, instead of actually paying attention to the things that are going to drive price fluctuations in this market. Does that make sense? So it doesn't matter if Bitcoin hits $300,000, $100,000. It doesn't matter. It's what's the environment when it hits those figures, whether you're going to hold at $300,000 Bitcoin or $100,000 Bitcoin, or whether you're going to sell at $100,000 Bitcoin or $300,000 Bitcoin, depending on the risk on, risk off market environment at that point in time. Does that make sense?
Yeah, that makes perfect sense.